Hello, long-term, long option long swing trading strategy, large cap stock, swing trading, daily chart analysis. We are going to analyze some stocks on our watch list. We are going to see how we can analyze how many we can analyze in a short period of time, and we are going to do it together. So the first one we are going to analyze is ADI. As the title stipulated, every single one of those stocks are large cap stocks, and the market closed yesterday, Friday, May 23rd, 2025, and we are going to see how those stocks where they at on their chart. We have the purple lines. They are the lines that we like to buy those stocks at. So they are our entry point, and we are targeting a new high as our exit point by default, but it will vary from stocks to stock depending on how they fluctuate, if they will continue to go up or if they'll pull back from that once they hit that high. You see this one, when it reached that high, it pulled back, it didn't continue to go up. So those are the things to take into consideration if you like to exit after you reach a new high, or if you like to stay in the trade a little bit longer. But with this long option and swing trading strategy, the strategy is to buy at the valley and sell it at the peak. But the valley and the peak will be reached by the stock before you make that decision. So the decision is made after the fact. So at the valley, when the stock start making higher, to reach the valley, it will make lower lows. And when you reach the valley and start going up, it will make higher lows. Few of those, and then you can buy at the first green bar that follow a pullback. So we are going to use that. We are going to keep that strategy in mind when we are analyzing, and we are going to analyze quickly. So for this stock, yesterday the price went up, but you can see that is nowhere near where we would like to buy. It left there and is on its way going up. So the next one is ADP. So ADP, well, is going up, is nowhere near where we like to buy. The stocks highlighted on the list are the one we already purchased, and we can, that's fine. AFL. So AFL, we like to buy at this line, but right now is nowhere near it. The next one is AJG. AJG is going up, so it's nowhere near where we want to buy. The next one we bought it, we have not sold it yet, AME, and we bought it in 2024. So we bought it and it pulled back, went and reached where we like to buy it again, went past it, and now it started going up. We didn't buy it when it pulled back. AMP, let's go back here. Oh, in fact, I need to change this to line, otherwise it's going to be putting arrow all over. The arrows on the chart, just the one at the bottom pointing up shows where we bought it before, and the one on the top pointing down shows where we sold it before. So we like to put arrows on the chart to show us those previous transactions. So AMP pull back within, it was what, April. It could, and I must have been targeting it, but I didn't buy it because I don't have money in the account. Most of the money has been used to purchase stocks few months, up to a few months ago. So, and I have not been analyzing the chart much this spring because I'm trying to learn how to grow annual vegetables to save money on groceries, and I have not been analyzing stocks or sowing this spring. So this one, well, it is on its way going up. So we are going to continue. Although, let me see. Let's see if we can make this a little bit bigger. And having this to just explain the strategy to buy. If I will buy this one, it will be probably around this area that I will buy it. If I didn't catch it there, because after that it pulled back again, another area I could have bought it will be around this area as well. Those will be good buy. But right now it went up and pulled back here. And technically, if I want to buy it, I can still buy it. Because it's now, let's see how far it is. $4.99 to $99 different here. And $5.82, I had to say, is closer to the new high. Do you see like $5.82 here versus $5.04? It's like 78 difference here versus, okay, I'm comparing it to here, $5.92, but it's not really where I will have bought it. I will have purchased it somewhere here, so that would be like $4.59. So $4.59, we can save 62 different. So it's pretty much like right now it's like it's halfway between where I will have purchased it and the next new high. Does that make sense? So those are kind of analogy we have to make when we are deciding if we can still buy. But yeah, we can still buy it, but I will prefer to see if there is others that are closer to the valley than too far gone already. Does that make sense? Otherwise, yesterday could have been a purchase. If Monday is a holiday, but the next day that the market will open, if it's a green bar again, it could be a buy as well, because there's still money to make in here. So it's going to continue going up, going down. It could even pull back a little bit before going up again and all that, doing the zigzag all the way before it reaches new high. They are upward stocks, large cap upward stocks, so they do reach new high frequently. Therefore, we use the valley and the peak as our entry point and exit point in this low up to long swing trading strategy that I'm using. But you have to customize it, along the way, based on the stocks you are trading, based on your risk tolerance as well. So the next one is APH. So APH, well, it didn't really reach this area, but it's going up. So the next one is ATO. ATO is going up, it's not going down, so it's still following this trend line here. The next one is AZO. AZO is going up, it's not nowhere near where we'll buy BKNG. So BKNG, for some reason when I put it in, it tends to take a few minutes before it will show up. So BKNG, we bought it there, we sold a few days ago there. Let's zoom a little bit. You can see this arrow there. So it reached, you see, after the fact, it reached this new high, and I decided to keep it, to see if it's going to continue making new high, and I think it will. But after brainstorming on it a little bit, I decided to just sell it. and we purchased it there on March 20, and it pulled back even further down, and then start the zigzag all the way. And the reason why I decided to sell instead of staying in the trade, one reason was to compare the previous high. So you can see when it went back to this trend line, in fact it went below it and continue, it reached a new high, but then it followed this trend line here, creating the peak side of the mountain. So it reached that new high multiple times. Do you see it? Multiple times for a while, since somewhere here September all the way to December, before it start going down, and before it start going down. So about 3 months or so, or 4, but you can see that it is going up, pulling back, going up, pulling back along the way. So that is a decision I had to make. If I want to use that, if I assume it's going to follow the same pattern, when it pull back slowly all the way down again, and when it reach it and start going up, I just bought it after this low is higher. The bottom of that bar, the red bar, is the price at the closing was lower than the price in the morning when the markets open. A green bar is when the price at the closing of the day is higher than the price in the morning when the markets open. So this bar, which is a pullback, the bottom of it is higher than the bottom of the red bar here. So I have a higher low here, and I just bought it because I've been trading it for a while. I didn't really want it to wait for multiple proof that it's going to start going up. But when I did that, I had to stay in the trade for a while because it pulled back even lower before it was ready to leave. When those stocks are pulling back to the valley, sometimes they linger at the valley for a while by going up, pulling back to the valley, or going below the valley, and so forth before they are ready to leave. So with those large cap, you may not make a lot of profit, but it gives you time to catch the trend. So, but yeah, and if you catch a little bit early, you stay in the trade longer, being negative for a while before you start seeing positive unrealized gain in your account. So, but if I say it's going to use the same pattern, that means it's going to be pulling back a little bit and make high lows again, and it could do it for 2 months, making a higher highs, for a while, and I could decide to stay in the trade for why not 1 more month again and making more profit before I sell it. But I just decided to just lock in the profit that I have and just get out of it. So I made $750 from this trade from March 20 to May 20. 2 months. I held it for 2 months. So, and I made $720 profit, and with one share. Okay, so because it's kind of on the pricey side, and I only bought 1 share of it, but I could have stayed in it longer because there is a chance it could continue making profit. I just know that it's going to pull back. It's going to try to create a wall to support its climbing up. So that means it's going to be pulling back to that wall to rest a little bit and continue climbing, pulling back to that wall and rest a little bit. So by selling it here, if I want, with this long option and swing trading strategy, I can pair it with short option and swing trading strategy by buying it at the upper side wall. I don't know if it makes sense, like by using this as a support line to buy it at. Does that make sense? And when it pull back and reach a new high, sell it again. So that'll be a short period of time type of things. A short it won't take long. I don't know if it makes sense. It won't take 2 months or things like that. It'll just be a matter of days. Or I can decide to buy it and wait in a little bit, but I'll buy it at a higher price compared to if I have stayed in the trade. But I don't think I didn't really think about doing that. I prefer to liquidate that money and use it to see if there is some other stocks at the trend line now on my list that I can buy with that money that I cashed from here, the capital use and the profit accumulated, that's $750. And then keep analyzing it until when it come back down to the trend line, buy again. But again, as you can see, from December to March, it was how many months is that? You see that it could take that much longer for that to start it to go down. So I just try to use what the chart is showing previously to see if it's going to repeat that same pattern currently. That is the strategy that I use. It's not the only way to trade stocks, but that is the strategy that I'm trying to perfect. So because we bought it and sold it, I'm going to take the highlight out of that. It go back to the pool of available stocks to buy. So the next one we are going to analyze is BLK. So BLK is going up. The next one is BRO. And BRO is not at the trend line we like to buy it, is at this one, but I would prefer not to buy that high at the far side wall. The next one is BX. I have it in blue because I must have been targeting it at some point. Okay, when it was close to here. And right now I will say that it is getting ready to start going up. So we see it come close to it, but not too close. You can see how wide is that mountain. So this is the far side, the upside wall climbing up. Now it did the downside, came close to it. That's the lowest trend line, the valley line, the support line that we have. It came close to it and then went up, pulled back, and went up, pulled back. So let me see here. I will say Friday could have been a buy. If Tuesday we have a green bar, we could buy as well. So we can compare this at the line here. We can compare it to this area and we can see. So when it left it here, it reached some highs here before they pull back. So when it left it here, went up, so it started building this mountain wall quickly, going up, pulling back to it. So but it was reaching new high before it will pull back to the wall that is supporting the upside of the mountain, on the mountain. So we can, just for my own, I will say this one is it BRO? A buy, not BX. BX. So I will put it in red. Even though it's far from this, and I could have purchased it, somewhere here, do you see this right here and even somewhere here? But if I did that, then I would be in a red, in a loss when you pull it back here. So when you pull back this to this line here and start going up, the next time the market's open, if I have a green bar that day, I could buy. So this will be a good entry point here. So buying it at the value does not mean necessarily buying it at that line when you see it there. You can do that for a stock you have been trading for a while, but this will be my first time to buy. And since I have not been analyzing stocks for at least a month or some weeks, I didn't catch it on time after it left this area. I put it in blue because I was targeting it, but I didn't have my eye on it much, so you can see. But it was a good thing too that I could have bought a little early. KC or not. So that is how you decide if something is good for you to buy. So KC is now close to the trend line we like to buy. Is going up. The next one is CATS. So CATS reach this trend line and start going up. So let's see, is if we were, since clearly it didn't come down to here, that means here is where the lowest that it wanted to go. Okay, so now if you are analyzing it, one place we could have bought it will be here, since this low is higher than this one, although it's lower than this one here though. So we didn't buy at that green bar. This one could have been another one, the two here, another one will be here. So 1, 2 days here are entries. I'm just counting as a 3. So this will be a fourth option for us because this red is higher than this one. That's still higher low, so that's 4. In fact 5, because we have 2. If you didn't buy that day, you could buy the next day. The next one would have been this one, but then if you bought it here, when you pull back, we'll be in the loss here, so I won't count this one in it. So we have about 5 1, 2, 3, 4, 5 options to buy. We didn't. So here we have 2 days. I don't like to buy past 2 days, so we could have purchased it this day, the 22 or the 23rd. We didn't, so we need to look for a pullback like a red bar, and when we see a green, if we want to buy, we will buy. So now the question will be, from here, from the first entry point that we could have purchased it at 288 to 343. Let's just say about $40 difference there. From here, $40 of 343 to the next high, which is 418, is okay. So it's closer to where we the first entry. That'll be a good entry point for us. It's closer to it than it's closer to the new high. The easiest way that I like to do it though, which won't be necessarily the accurate one, would you see where the bar is here, that line here? Even if we're trying to extend it, let's extend it here. Those are just estimate. You will just use the one that is quicker for you to make your estimate, unless you want to be very accurate. Is anyway, is yeah, I think the way we did it is accurate enough. Where we will have made the first entry point is where the price is now is closer to it than the exit point. Alternatively, you can just go with the valley line 271 to 3 whatever and compare where the price is now to this. and see where the price is closer to. Does that make sense? If you want to buy it close to the valley, you can use that to see if it's far gone away from the valley or if it's still good for you to buy. At this one though, I will say we can still buy after we see a pullback and it start going up. We can buy, because again, when we trace this trend line here, this uptrend line connecting the higher lows, when you want to get in, it's good to get in at the trend line. Does that make sense? So, but yeah, it's pretty much at the trend line. So we'll see Tuesday or Wednesday how that is going to be. But so this is going to get a green bar, a red as well. Okay, so the next one is CBRE. So CBRE, no, we are not, it's not easy, it's not ready to buy. CL, we bought it before, and you can see we bought it, and it's still not too far from where we bought it. So it's kind of plateau there, giving plenty of flexibility for people to buy more. So CMG. But we do have profit in it because we like where we bought it versus where the price is now. There is a profit there, but it's nowhere near where we want to sell it. CMG, we are negative in it. We bought it there and the price went lower, and yeah, so that one we are in the red in it. COR is nowhere near where we want to buy. It's going up. Costco, COST. So COST is going up. It's nowhere near where we want to buy. CRM is nowhere near where we want to buy. CSL is a pullback. It didn't quite reach it and it started going up. But there is a chance it could pull back lower again. We don't know. So yeah, I'm not going to do anything with it. I'm just going to keep an eye on it. I'll keep that blue there. DECK, because this one can still be purchased where it is, but the concern is it could go below a little bit. Just because it did that in the past, it could. So this one went below the trend line there, went up and is way down there. So we don't know what is really going on here, but it's still at the trend line, so we'll keep an eye on it and try to buy. DOV, but the other two that we put in red, they are better positioned than DECK though, but DECK is closer to the trend line, but it does not really show that it's actually going up yet. But because I have purchased it before, I could still buy it at the trend line, and if it pull below it, I might just have get stuck in the trade for a while. So this one is not ready for us to buy. hold on. No, is again, he left it already. Does that make sense? He left it already. So, but it's not far gone. One entry point will have been here. Second entry point will be here. And then it went up a little bit and pulled back. So technically where it is right now, we could still buy because these are the support line here going up 177 versus 222. I had to say, well, how much difference is that versus 159? Almost $20 difference here, about the same or a little bit higher here, halfway through it. That's a judgment call there. But anyway, ECL. ECL is now where we want to buy. EQIS. Okay, EQIS, as far it went was somewhere here. It didn't really reach it and it started going up. So but anyway, it's just far away from here, but seems like it's following this line here. It's still, let's see, when they touch base with here, it reached a new high before it pulled back. So if we use this, that is the line that is trying to follow, and it went a little bit below it and start going up from there. Let's see here. This does not really, okay, it went up. Oh, okay, so this is one entry point here. Another one will be around here. That's 2, 3, and we are there. So it can still be purchased. Let me see. Oh, it's a pullback. Friday was a pullback. That's why we have it right here. So if the next day the price went up, is a green bar, it could be purchased as well. Fast, we purchased it before and we have not sold it yet. Just need a few seconds to show the lines on it. I'm not sure why it's not showing me the lines. But we purchased it at some point and we have not sold it. For some reason I'm not seeing the lines on it and where we bought it. FI. FI is going down. You can see it's making lower lows. So we don't know how far it's going to go. I will just keep looking at it. Let me try fast again. It's not showing me anything on it. So, okay. FICO. And FICO is going down. We bought it there and we have not sold it yet. It's going down. If anything though, those two, I can put them in blue to keep an eye on them, to see if I want to buy more of FICO. Now, so the next one is GD. So GD, we bought it there and we have not sold it yet. the arrow is there. So it's positive in the account, but you can see that it's still lingering around that trend line, and that trend line could be extended. You just make sure start getting that to make sure it does not leave there to just say. So you can see there is time to buy more for somebody that didn't get in the trade so far because it's lingering there. So Google, we bought it there. It's positive in the account, but you can see it's still lingering around the same area. The next one is GWW. GWW, we bought it there, and then it pulled back. We bought it again, and it started going up. So I will think we are positive in the account because of buying it this low. Will offset this since the prices are close to this already. But again, it's not where we want to exit yet. So ICE. ICE is nowhere near where we want to buy. The next one is IRM. We bought it, and then the price pulled back. We bought it again, and it started going up. IT. We have it in red to buy, and it's not far from here at all. So let's see, it's at the valley again, and we can see Friday was a pullback. If when the markets open, shouldn't have done that. I was using at this point I'm just estimating it, but I'm going to zoom out to see. Okay, I did it well because that is the touch point there. So yeah, it's still at the valley. It went below it and start going up. So this is definitely one that will be a good buy. So to distinguish that from the rest, I can even make the whole line red since I have some other red there. And you can see that's how, out of the list of different ones that are positioned for you to buy, some might be well positioned than others. So this one, I don't know, it pulled back to here and start going up. So it's not too far from the line, but frankly, yeah, it could still be purchased. But when I don't have a lot of money in the account and I have multiples, one that I put in red, I won't bother making this one red. GPM. But yeah, I can say that one is well positioned as well to purchase now. So JPM is not. It's far from where we will buy. KR is now where we will buy. Let's see if we can go down. The next one is LWW. No, LII. So LII is nowhere near where we want to purchase. The next one is LLY. We purchased it before, and we have not sold it yet. Where we buy that high, it pulled back, and it has been lower than where we bought it. So we are negative in that one. MA is nowhere near where we want to buy. ANH. Okay, so that one we bought it there. You can see that it's not far from it. Like you see, it's still at the valley. So yesterday could have been an entry. If the next time the market open, there is a green bar, you can still buy. You can see it's still at the valley here. When we bought it, it pulled back on us, so we were negative for a while. Now it start going up, and where the price is higher than where we bought it. So it's positive in our account, but it's nowhere near where we want to sell it. But because it's still at the valley, there's still plenty of time to buy shares. But because we bought it already, we are not going to buy it again unless we want to buy more, but we are not. So, but that one is still a good one to buy. After what? 2 months. March 21 is when we first bought it. So 2 months time frame to get in the trade. This one we bought it here, MAR. It pulled back on us and has been going up, so we are positive on that one. MCK. MCK is far from where we want to buy. MKL is far from where we would like to buy. MLM, we bought that already. We bought it there, but I think we bought it somewhere here as well. So therefore we could be positive in it because of how low we bought it here and how many shares we bought compared to that, and where the price is right now. But again, the exit point needs to be higher than the first purchase before we sell it. So MMC is the next one. MMC, did we buy? No. Okay, so MMC, we have so many lines there though. Okay, we can take that one out of there. And I'm not sure why this one was there. Okay, so MMC, when it reaches, went up, pull back. This could be an entry. That's one, that's two, that's three. So yesterday could have been a purchase. If the following day is a green bar, it could be a purchase time too. But I don't know. Let me see. Yeah, not sure I want to buy this one. If I'm limited in funds, I will see which one is closer to the valley. That's what I will buy. So, but this one has an entry point as well to buy shares. MRVL. We bought it there, it pulled back on us, and it's still pulling back, so we are negative in that one. Microsoft, MSFT, we bought it somewhere there, so we are positive in it or getting close to it. So the arrow is there and it pulled back on us and now start going up. Okay, and we bought in 2024, so July 2nd, and we have been negative for that time frame. So MSI, we bought it there and it pulled back. So we are negative in that one as well. NDAQ, and that one is it, but it's not showing me anything here. Okay, it's now close to buy yet. NVDA, we bought that one as well somewhere here, so we could be close to be positive in it, but now we are going to wait for a new high to reach. NVR also, we bought it at a higher level. So NVR, we bought it there again at a higher level. It pulled back. When it reached this, we bought it again. It's been lingering there. ORLY. ORLY is far from where we want to buy, so no, it's going up for the time being. P car, we bought it. Let's see, we bought it there. It seems to me that we bought it here, and then when it pulled back, we bought it again. But guess what? It pulled even below it, so double negative there. PG. So PG, okay, so let's see how PG is doing. It reached this line and it reached this line and start going up from there. Let's see. But do you see it really does those zigzag? Like when you reach a new high, you might as well just sell and get out of it, because it's going to do weird things. So I'm not sure how I'm going to understand this chart here. It reached it and it's been going up here, but again didn't reach the highs, new high there, and he pulled back, went up and pulled back. It's just like you can't really use the new high as an entry point for it if it's doing that, not unless you really buy at the trend line, because if it's going to be doing this, you might as well use a short trend line swing trading strategy for it. But I don't know. So it's not Procter & Gamble, is it? Yeah, it is. Huh. Yeah, I don't know. I don't think a new high will be an easy point strategy for this one. Is just like when you reach a high you like, you sell it, because it's going to be going up and down, up and down. Okay, PGR. So PGR, well, you like to buy it here, so it's nowhere near there just yet. PH. PH, we bought it where? Somewhere there. And we have a new high here, and we didn't bother selling it, and it pulled back and start going up again. Okay, so maybe next time it reach a new high, we'll be in our right mind to sell it. PWR. Okay, so PWR, we bought it there on the fast upside wall of the mountain, and it was on the way down, so we target this valley instead, and we bought it again. So right now the price is above both of them, so we can sell it and make a good profit in it, but we are targeting the new high. So and I think I'm just going to continue targeting the new high. For this one, and it seems to me that it's using this upside wall mountain as a support for the new mountain is creating as well. So yeah, we are just going, and when they leave the valley and reach a new high, it's going to pull back to the mountain wall and then create new highs, pull back, create. So it could be paired with a short upturn and swing strategy if you do not want to be losing those swings. So but it's going to be creating multiple highs before it will decide to go back down to the valley. So whether you want to be selling it at a new high and buying it at the support of the upside wall of the mountain will be up to you. So I think with this one, who knows, we might just decide to just, when you reach a new high, to stay in a little bit longer and see those pullbacks, but stay in it. From the first one here, December, it was done with new high in January. A 1 year time frame. So when it is leaving the valley here, February, it could take well of a year climbing the mountain. So with that in mind, we could decide not to rush into selling it when we see the first new high, because it could decide to climb the wall going up for a year before it decide to go back down. So that means if we sell it, it could take us about a year before we buy it again, because it will reach multiple new high before it decided to go down. It didn't take long from there to reach the valley though, but it could take multiple new highs before it's really is done going up and decided to go down. So why rushing it? If we are, we buy in a way that we could continue making profits in it, we might just let it accumulate there for a few months, not to accumulate all the profit is there to accumulate, because we don't know when it's going to be done and decided to go down. So but we can just stay in it for a few months after the first new high is reached for this mountain that is creating, and then we can go from there. So which is what PWR. So that one is a good buy. Even though we bought the first one at a higher level and then bought it again at a lower level. So this one is nowhere near where we want to buy. Ross. So Ross, we bought it there. He pulled back on us, went up, and he's still pulling back there. Even though yes, Friday was a green bar, that green bar is very low. So we are negative in that one. RPM, we bought it that high. It pulled back. We didn't buy. Did we buy more? No, we didn't. So it pulled back down here and start going up from here. So, but yeah, for the one we bought high, buying it when it's at the valley start going up, I don't know, could average the cost, that it will lower the cost of the first purchase. So the next one is RSG. This is up. We bought it and sold it here. You see, we bought it at this line here. It reached a new high, we sold it, but guess what? It's not down, creating new highs. Even though it's pulling back, is going down, making a new high, so it's nowhere ready to go down. RSG. The next one is SO, but because we bought it on the far side wall, we don't know when it's going to be down there. We decided to pull back to any one of those lower lines, so I didn't do more of the buying with it. Where is the next one? SO. So SO is nowhere near what we want to buy. SPGI. SPGI is nowhere near what we want to buy. You see how we are analyzing it quickly? Because I'm explaining certain things, it's taking longer. Seriously. But when it's not nowhere near where you want to buy it, you just quickly move through it. Or when it's nowhere near where you want to sell it, you quickly move through it. But when it's close to where you want to buy it, then you take a little bit more time to see, if it's too far gone for you to buy it, if it's still continue going down, or if it's going to continue going down, or things like that. So, but this one is nowhere near where we want to buy. TJX. If anything though, is at this level. Seriously, what am I doing? Okay, it's too far. You see, when it left there, is around this area, and because it pulled back, and we have that, it'll be good to see a red bar, a pullback, to see how that pullback is, and a green bar we can buy because it's closer to this trend line here. So pretty much it went up and pulled back, start going up from there. A green bar, because you have two green bars here, I don't want to buy after two green bars, so I like to see a pullback to see how that pullback is and buy at the next green bar. There still be an entry point there because it's going to be closer to the support line for that upside wall that is creating. But again, is far from where the valley is on its way up there. But yeah, it could still be purchased. Let's see. When it reaches this though, it will pull back gently, will come back down, doing that. But yeah, it still could be purchased because it's closer to this line here, down away from it. But I have some good ones there, so, and not a lot of money to work with, so I have to be picky. So this one is nowhere near what we want to buy. We will move to the next one. TMUS. Is it that? TMUS. Oh, come on. TMUS. So this one is nowhere near where you want to buy. TRI. TRI is nowhere near where we want to buy. TRV. TRV is nowhere near where you want to buy. And again, it's because of long uptrend long swing trading strategy that we are using. We are targeting the valley to buy. Okay, so this one seems to be closer to the valley, but not quite. So I don't know what it's doing, but it seems to be going to it. So the next one is TUS. TYL and TYL is nowhere near where we want to buy. The next one is URY, and we purchased it before. Okay, we purchased it that high, it pulled back on us, we purchased it again, pull back and start going up. The next one is Visa. Is nowhere near where we want to buy. The next one is WAB. WAB is nowhere near where we want to buy. The next one is WM, Waste Management. Is nowhere near where we want to buy. The next one is WMT, Walmart. Okay, so it did pull back. April. But again, it started going up already. It took a while for that to pull back here though. February. Okay, 2 months. I say it was done. Then April. So let's see this one. Okay, so it pulled back. This could be an entry point there. That green bar, 1, have 2, 3, 4, was multiple entry points, and we didn't take it. So we could actually buy the next time the market's open. If we have a green bar, we could buy. But let's see how far it is from the trend line here though. 79.96. It's like it's close to here. Than it is to here, if that makes sense. Some reason it didn't come down to here at all. It just followed this line. So if I go from here, 49 to 105, it took a while. It took 1 year from December to February. What about May? Yeah, it pulled back to it and then go up from there. Sometimes in May, pull back. August, pull back. Okay, I'll keep an eye on this one. We can still buy. Just because I've been watching it for a while, I know that there could be money to make in it, but it's just far from the value that I want to buy. It's quite gone from it. But because we'll be in the trade for a while in it, that's what make me wonder. So this one, wow, we bought it somewhere higher up there, and it has been on the low side for the time being. Chances are it could try to come down before going up, we don't know, or it could just go up from here, we don't know. But this concludes how one way you can analyze stocks using long option long swing trading strategy to analyze a stock to see stocks that are creating higher lows at the valley of the mountain on their way up for you to buy, and stocks that you already have in your portfolio to see if they reach a new high for you to sell, or if you want to stay in the trend longer because past experience show that they will create multiple highs before they will decide to go down, or if it's good to pair long option and swing trading strategy with short option and swing trading strategy, because once they reach a new high, they will start creating a support line to support the upside wall of the mountain they are climbing. Since they are going to climb it, creating new high multiple times, they will want a support for that wall. Therefore, pairing long uptrend long swing strategy, if you buy it at the valley, to sell it and buy it back at the upside wall of the mountain, at the at that support line, that trend line, and sell it when it reach a new high, and buy at the line again few times before you get out of the trade, to wait on it to be done and pull back. Those are decisions you have to make for yourself. But again, those are large cap stocks that you could invest in long term that we decided to trade. They may not have a lot of profit in a short period of time if you are trading them using short uptrend and swing trading strategy. But if you are accustomed to them, you can buy multiple shares. That will be the way to increase the profits, but you'll make profit nonetheless. And when they pull back on you and you are negative in it, you could just leave them in your portfolio while they become, for them to become positive again, for you to sell them. So we do not sell them at a loss, or at least we try not to, because they are stocks that are not going anywhere anytime soon. And that is a way to trade stocks in a conservative way, trading stocks that are stable. That means you are not going to make a lot of money very quickly, and you are not going to lose a lot of money very quickly either. And practicing how to trade stocks and adjusting your strategy to match your risk tolerance and your personality type and your time availability as well. And for me now, trading stocks for at least a month, since I didn't have money in the account to do so, because as you can see, most of them are highlighted. A lot of them are highlighted because we bought them and we have not sold them, so our money is tied up in them. And some of them we are positive in them, and some of them we are negative in them. So, and I shift my attention to learn how to grow vegetables in an intensive way, to have greens that I can freeze for winter use. So I shift my attention, because I'm more of a perennial vegetables grower, and I wanted to dedicate time to onion instead of just planting them. If they grow, they grow. If they don't, they don't. I like to see how I can actually grow more of onions to complement what I harvest from my perennial vegetables for my winter use. And since I don't have money to trade, I didn't spend a lot of time analyzing chart either. But the stocks has been fine. I will try to check them times to times though, and that's how I was able to sell BKNG during the week. So, but yeah, with those stocks, when you do not have time, it will be there when you come back. Does that make sense? So if you have a job that takes a little bit of your time, or some family matters that take a little bit of your time, they will still be there. And this strategy work well for, if you have a lot of responsibilities and not a lot of time to devote to allocate to trading stocks. But that is more active option compared to just investing in dividend long term, in stocks long term or dividend stock long term. You make more profits, in my opinion, than investing in the stocks long term, because your money will grow following the valley line, the uptrend line, if you invest long term. But when you are trading these stocks you can invest in long term, you'll be locking in those swings away from the valley line. You'll be locking in those profits, and of course buying it back at a higher price than previously, but still the profit you lock in will offset that, in my opinion. So thank you so much for watching. We thank you very much for your time. We thank you very much for all your comments, and we thank you very much you all that subscribe to our channel. I'm Afiavi Liberman, creator of Liberman Consulting L.L.C YouTube channel and ninasoap.com, our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And trading stocks is one way to reach that goal. We do have different playlists for swing trading related videos, and you'll be able to find them in the description of this video. Just start small, as low as $100, if that's enough to open a brokerage account or a Roth IRA if you have a job with a brokerage, a good brokerage firm. And that $100 is enough to buy one share of stocks. That's good enough to start. And practice the strategy you are using. Even if that's few cents profit you make after you pay the fee, the trade fee, that's a profit nonetheless. Just start small. And once you master the strategy you are using, you know that you just have to buy more share to make more profits, because the strategy is there. You already master it. You choose the stocks that go well with the strategy you are using to create a watch list of stocks to analyze and to buy from. And you know that to make more money, it's not about changing the strategy you are using, it's just by buying more share. But just start small to customize the strategy you are using and to pick and withdraw stocks from your watch list that are doing well with the strategy. Add to your watch list stocks that are doing with your strategy. Take out from your watch list stocks that are not doing with your strategy. You cannot change the stocks, it's the strategy you have to change. So find the stocks that are well with the strategy you want to use, and once you were able to get those two right, you know that to make more money, you just have to buy more share. Does that make sense? So with this strategy, we choose the value to buy and we choose the new high to sell. And they are upward stocks, they reach new high frequently. And that is the simple strategy we are using. And we can pair it with short option and swing trading strategy if we feel like we can sell it after the first new high and buy at the support line of the far side wall of the mountain, if that makes sense, and pair it with the long option and swing trading strategy. So, but it might work with some stocks, may not need to be used for with some other stocks, because that is the valley line and this is the upside wall of the mountain, because the mountain is like this. So you need a wall to support that side of it, you need a wall to support the downside of it as well. So pairing the long option line is when you buy at the valley and sell it at the exit. And if at the first exit, at the first new high, you say no, I'm not going to sell it, then you stay in it for a while before you sell it. But if you say, you know what, I'm going to sell it and just buy it back at the upside wall, that trend line, that upper trend line, and sell it, buy it and sell it, buy it and sell a few times before I stop, because I don't know when it's going to be done and it started to go down. That is pairing a short option and swing trading strategy with long option and swing trading strategy. So, and as this show in 2024, we use short option and swing trading strategy. 2025, we are using long option and swing trading strategy by just waiting to buy at the valley. And from there, if we want to pair it with short option and swing trading strategy, we'll do that, or just stay in the trade longer, accepting the pullback to the mountain wall until we decided to exit it at some point. But those are choices you have to make depending on each one of those stocks, how they are behaving, because every single one of them will have a different chart. Thank you so much for your time. Do you swing trade, What strategy do you use? Will you please share your experience with us, your answer with us in the comment section? Thank you.